This week looks like it's going to be an interesting one with the post NFP price action. As always, after the NFP week, we've got some interesting movements in the market and a bit more clarity. So let's see what we've got for this week. Before we begin, my name is Dima. Thank you for joining me. I will have some more high probability setups for you in this video, as usual, breaking it down, looking at the markets and where the opportunities are. So welcome to the Sunday market analysis. And let's begin as always with the calendar. Let's break down what we've got for this week. What are the high impact news events? And then I'm going to show you some of the opportunities in the market that you may want to pay attention to this week. Let's look at the calendar. All right, so here we are. We've got Monday, 9th of October. We've got bank holiday in multiple countries. So that could be a slow day. We'll see how that pans out. Typically Monday's a little bit of a slower day, not the best day to trade. And then we've got Tuesday, some medium impact news. And then Wednesday we get into it, the PPI from the US, FOMC minutes from the US, of course. GDP figures from the UK on the pound on Thursday, and then CPI numbers, another big one from the US on the same day, Thursday. And then Friday we also have some high impact news, again pound. Then we have a speech on the euro, and then some consumer sentiment release on the dollar. And the thing is that if we don't get anything on the pound during the week, watch out for Saturday. There's actually weekend news, so it could be that the price action could stretch or be delayed, or it may work out the following week. And usually the weekend news is a tricky one, so watch out for that. All right, let's have a look at the charts and the technicals. Price action, what do we have? This is what I've got for you this week. Here's the short list. A little bit different this week, just adapting to the markets. That's what I have singled out. So let's have a look. And as always, going to begin with the dollar index, as that is the indicator for the markets. We've been looking at this for a while. If you've been with me the last few weeks, and we've got continued bullishness, and last week we had this upside down reverse pin bar, which indicates that we have some potential, at least in the short term, bearishness in the market for this coming week. Now, what are we looking at? How do we look at this within the overall framework, with overall bullishness? Well, the last swing low would be the point where we would now invalidate the trend, I should say. And if let's just expand this and go into the daily. Well, we can see that that point, now that this invalidation point into bearishness has come in, this will now be the point of reference. And then we did draw out this level before, which will be the lower part of this channel. And what we want to see is a continuation into this level. We can now delete these previous weeks and the bearishness to continue from last week. However, we're still in a higher time frame bullishness until we breach this level right here. At least that's how I'm looking at the market in terms of probabilities for now, remembering that's, manage your risk, and this is one person's view. So that is the short-term idea on the dollar. Let's have a look at the currencies and the other pairs. So here we are, and this week we're going to look at euro. What do we have on euro? Well, the reverse of the dollar index, of course. Euro is a big factor in the basket of the dollar index, so it makes sense. We're seeing the reverse. We had this pin bar, so it looks likely that now we will have some bullish price action in the week. Going into the daily, it had our invalidation point, and since it has done that, we're now looking at bullishness. So we can get rid of that. We have hit some targets over here last week. And then the next idea here, if we're going to go bullish, where is this level right here? So now this low, this clear wick to the downside from last week, is the invalidation low. Let's have a look on the 4-hour time frame. You can see we've had a break of structure. This was the NFP fake out, whatever you want to call it, stop hunt to the downside, and now we're going higher. This would be the next level to look for. So here's our target 1, and then another target up here as a possibility. What does that mean? Well, that means that if we see a lower price, then this will be the scenario, and then plan B, if you want to call it that, is the invalidation of this low and then continuing lower, which would be this. So then it would be this idea. So let's see where the market takes us, and the level, if it's not already obvious to you, then I can draw it out, would be here. And let's see what happens and how it plays out. At the moment we are, it looks like coming back into this kind of range, a little bit of unclear price action. However, on the higher time frame, since we have pushed higher and combining it with the dollar index, it does seem like we will have some short-term price action to the upside. And yeah, no guarantees where it's going to reach, but these are the reference points we're going to aim for, at least for this week. That's how I'm seeing the euro dollar. Let's go to the next one, euro pound, starting on the weekly once again. Let me just remove these drawings for a second, and let's have a look what we've got. Well, we've got bullishness. We were bullish for the last few weeks on euro pound. Last week it did not continue, it just ranged, and as you can see, typical of the retracement price action, we have slow, steady price movement, but the main direction is very prominent. You can see these big bullish clear candles, and on the retracement we have these wicks. Click a like if you like this video, and leave your comments or suggestions for what you'd like to see, and we'll accommodate you with that. What do we have next on euro pound? How are we going to look at it? Well, we want to see the end of this retracement and then a move to the upside. This is what we drew out last week. It never happened, and now we are still stuck in this range. We didn't want to break off this high, which we didn't have because we had no closure there. And now let's just get rid of these for a second. And this, let's clear up the chart, make it a bit cleaner. What we now see is that, seen as we're in the retracement, the clear invalidation would be here. And now from here, what do we see next? Well, we have this level. This is the level that we marked last week, which you haven't reached into. And I don't know if you could tell, but there is a kind of trend line here. And so a break of this trend line, a break and a close above this high would indicate the continuation to the upside. So we would then, if it happens, then have a level here, so a break and continuation to go higher. However, if we don't, then we move lower into this level, this blue level. If you like, you can draw a Fibonacci. You can see this, the halfway mark. Below the halfway mark will be the cheaper price, and that is what would be the most interesting price level and price point or area, if you like, to pay attention to. And for now, we are still bearish, and the week last week was bearish, and as you can see, we've got these lows of the week. So it makes sense that to get a cheap price would be down here and then continuing higher. Therefore, let's just mark it out. So something like this, a reversal, and then moving higher. That's the favored scenario in terms of probabilities for euro pound. And we're going to have to wait and see what the price action is like. We do have, again, why we reference the calendar, why do we look at the news at the beginning and see when it's actually happening, is because we can match that up with the chart and what we're looking at, and then use that to our advantage in terms of where the probabilities lie. Here's a possible trend line you can draw, and that kind of falls in line, overlaps, if you want to call it a confluence of ideas here on this level, which makes it high probability. So that is the euro pound, very interesting looking one. Let's see how it goes. Okay, next one on the list is euro yen. What do we see on euro yen? Well, if you want, you can have a look at the monthly. We have very clear bullish price action, very bullish, and currently this month's candle is bullish. The last week's candle very bullish, this big pin bar. So it looks a bit more obvious in terms of probabilities that we will be reaching to this level. And if we look to the left, we have this little swing point. If you zoom in on this level up here, so we've got a 2 reference point. We also have, let's see here, we'll also have the 160 whole number, and then there is a 161 whole number on the way, and then there is a 162. So paying attention to these significant numbers, because we do usually have some kind of reaction. So in the short term, we have bullishness for this week. So that is the outline for the week. And what we'd like to see, of course, is this high being broken. So let's see if it does. Going down into the 4-hour, we do have a level here. This will be the area of interest in terms of a level, and the last low, which is this low here, would be the validation point. So if the market moves beyond, we are going to leave this alone. However, because of this bullishness, what I'm looking at here is something like this, reversal, and then continuing to the upside. However, no guarantees, of course. The other possibility is that we just move higher, in which case we would have a break of this level, as I was already just pointing out here. So possible break, and if we move higher, a break pulling back to a better price and continuing to the upside would make it interested, and then that would be the price action to watch for if it actually happens. I have to see how the market reacts. We can see these highs. We want to see real breaks to continue to the upside. Okay, that's how it looks like on the daily. It will be good to see a break of this high and then close higher, and then that would add to the probabilities. As you can see, we've had this low formed, we had a high here, and then here we have reached into a cheaper price, and now we're heading higher once again. So that is the outlook on euro yen, and we've got these levels to watch for as well on the way. That's my outlook. And yeah, also bearing in mind we do have a weak yen, and we also have a bullish idea, bullish bias, keeping in mind on the euro dollar. So we've got euro yen is made up of euro and is made up of yen, and seen as the yen is weak and euro is strong, at least in the short term, which is what we're looking at on the euro dollar, then it makes sense to match them. Swiss yen, let's have a look as well. So Swiss yen is a similar one to euro yen, because Swiss and euro are kind of interlinked, so to speak. So it makes sense that we're seeing similar picture, and as you can see, monthly is very bullish, and we're looking at the next obvious highs to target, and we have had this new all-time high on Swiss yen. We are at a very extreme high point on Swiss yen. However, that's nothing to indicate that we have ended that trend. So let's continue on it. Again, similar to euro yen, pin bar there, big bullishness, big wick left behind. Let's have a look on the daily, and a similar picture. So once again, look to the same thing for the possible break, and then we have this level here, as you can see. So therefore break, pulling back to a better price, and continuing to take out these highs. That's the scenario. We also have a more minor level here. So once again, the idea here, if we get a better price, the other scenario is this, some kind of reversal, and then heading higher. The invalidation point becomes the last clear swing low, which is down here. So that's our reference point. And that is the idea on the Swiss yen for this week. All right, moving swiftly on. Hope you are keeping up. If not, pause and match this with your own chart and your own findings. You do want to make sure that it is fitting to yours. You're not just relying on me as well. Okay. And here's that high. Right then, let's move on, shall we? Let's go to New Zealand CAD. This is one we looked at last week, favored one, and it did work out exactly as anticipated, at least in terms of the probabilities. And what do we have this week? Well, we had this as the last swing low, which is marked out. The week ended up very bullish and continuing as planned, just carrying on with the last week's plan. You know, the same. Why change if we've got what we are anticipating? So the probabilities are still in our favor. Here we've got the swings and we have had them happen. We've had another swing here just as anticipated. And what we look for now is a move higher. So here I had our last invalidation point. This now becomes a new invalidation point. This is our reference of low, of where the reversal is. So what do we see now? Well, the idea is, again, if we come back and get a better price, of course, that'll be a good thing. And then if we don't, then the new idea would be a break of this high and then creating another swing, pulling back to get a better price, and of course, continuing on its merry way higher. So these are the two scenarios to look for, unless of course we invalidate this whole idea. And we've got bullishness on the New Zealand CAD. If it's not already obvious to you, this was the higher time frame. You could see a move, a very big impulsive move higher, slow retracement down. We had this channel. We then reversed, created a reversal, broken multiple highs to break these structures, and then we're just continuing to the upside once again, moving higher and higher. There's also a bit of a level up here, a bit of a swing point. So make sure to keep these in mind on the way up if the market continues on its way. Okay, I think that's fairly clear on New Zealand CAD, so let's move on. Moving swiftly on, we've got gold for this week. And why do we have gold? Well, bearishness on dollar is bullishness on gold, inversely correlated, similar to dollar and euro. It does look very, very weak, doesn't it? Gold here, it does look weak. And the previous weeks are bearish, just like on the euro dollar. However, let's have a look more closely at what we've got. Well, we've got a similar thing to the euro dollar bullish price action, a big engulfing candle which engulfs the previous three candles, that NFP reversal. We've got this pin bar, and now we're looking at some shorter term price action to go bullish. You have to be flexible. It is bearish, yes, I admit. However, let's just delete all of these previous markings so we don't get confused. However, we have to bear in mind, even though it is bearish, what we have so far. And what we have so far is this price action here. Now, if we take the last swing high to the current swing low, what we can see is that the expensive price to sell again from would be up here. So therefore now we are still at a cheap area. What does that signify? Well, if we are bullish, then we want to get into an expensive area. An expensive area would be a high up here, and the invalidation point would be up there at the swing high. So let's just remove this for a second. So this is our reference point as the high. Let's go into the lower time frame. And if we are going to be buying, well, the invalidation point to buy is down here. Let me spell that right. That's the idea. And what it looks like is we have a level down here, which we kind of already reached into, haven't we? Now, how do we look at this? Well, if we're going to short-term bullish, then of course a pullback, getting a better price, and some kind of reversal would be the favored idea if we get a better price. And if we don't, well, then we've got the next level up as this being a possible break. If and when we do get it, and that scenario, second scenario, would be a break, pulling back to get a price and reaching this next target. So we've got this next target up here, and that would be the idea. If we don't get a better price, we don't get it, and really do want to be careful because this is a short-term move and we do want to have a clear price action, something clear develop in order to actually decide that this would be a worthwhile trade. And then we'll play it by ear. We'll see how it reverses, if it does reverse, once it gets to a more expensive price. But now that it is a cheap price, it is a good idea, and maybe a good time to think about buying. Of course, we have this invalidation, so yeah, as usual, if we invalidate it and go lower, then this whole thing, this whole idea breaks down. Okay, so being flexible, we were bearish on gold before, and now we are mid-term, low-term bullish. So just keeping that in mind, keeping the picture in mind of where we are in the market overall. Okay. And lastly, we have S&P, which is another one we looked at last week. And what do we see? Well, here we've got last week being bullish. Again, the reversal of the dollar. Weak dollar means strength in currencies. We have that pin bar. So we're looking at some short-term bullishness in the market, even though we do have a bearish structure breaking these lows. So once again, similar to the euro, similar to the gold in terms of how we're seeing things, we are keeping in mind that the higher time frame is bearish. However, we're just going with what we have for this week, so we're just focused on the next few days, and what we do have is bullishness. Okay, so let me just put back the markings, and we can see the break through here, and then reversed NFP, reversed all of that. Now let's just get rid of this for a second. We reached this target, so that's no longer relevant. The next target down will be down here. However, now let's look at the bullish scenario. Well, the bullish scenario is these next highs. So we have these next significant highs. So this area and this area was the short scenario. We haven't reached it yet. We may yet reach into those levels, and that will be sometime in the future. So now where do we go from here? Let's go to the lower time frame. We've got that bullishness. The next best scenario in terms of a trade is this level, as you can see, quite clear. I'm going to look at the better price and of course some kind of reversal and continuing higher. That will be the nice scenario to watch for. We have this low as the invalidation point, and we also have this as breaking point. But we want to see a clear break, right? We want to see a nice minimum 4-hour candle close, and then we'll see what happens. So that'll be the second scenario. You can see that it's quite similar to the ones we just looked at, right? Similar to euro dollar, similar to gold, and that makes it not very surprising. However, we do want to pick the best setups and not trade all of them at the same time, because even though they are similar, and you can't just assume that they're all going to go in that direction just because they are somewhat related. Managing your risk is numero uno in this game. Therefore, we act that way. Okay, so here's that scenario. And you can also see there's a bit of a trend line developing, which has now been broken. And yeah, this at the moment is an expensive price. We want to see a cheaper one. We've got our points, we've got our markings, everything is planned out, and now it's a case of execution and managing risk. Okay, let's continue now, and it's a similar picture to gold and euro dollar. Here we've got the last clear swing, Here's the high. Here's the low. As you can see, we're still in that cheaper area. We want to see it reach into the expensive area. Here's that halfway mark, which we haven't yet got to. Okay. And I believe that is that. This is it for this week. This is what we are looking at. I think that we've now gone through the charts. Yep, we have. Those are our so-called biases, if you like, and how we're looking at this week. Do bear in mind that because we are trading, we are looking at scenarios contrary to the overall higher time frame picture. It is a lower probability scenario, low probability case, unless you get a very, very, very clean setup. So do bear that in mind, and there will be no surprise therefore to you if we get a sudden move to the upside, especially with the news, or downside, whichever the case may be, and your setup may not work, or you may get some kind of erratic or unexpected movement. But that's why we've got our stop loss, and that's why we manage risk. But we just do our best with the situation that is given. Okay, that is it for this week. Watch out for the news as always. Particularly, we've got this week pound, we've got dollar, and a little bit of euro. So let's watch out for that. All right, guys, hope this is helpful. Drop a comment below, and yeah, turn on those notifications, and I will see you on the next video on Tuesday, and of course on Thursday once again. All right, bye for now, and have a good trading week.